Yeah, so today, guys, this is a YouTube video I told you guys I was going to post a couple days ago. Here it is. And we're going to be talking about how to escape the break-even stage in trading. Okay, so let me move my camera really quick, actually. Sorry. I just feel like probably looks a bit better like that. I don't know. But yeah, so first things first, I just want to say to you guys, biggest thing with this video, if you're actually struggling with being in the break-even stage as a trader, as a you an aspiring you want to be a profitable trader, biggest thing is take some notes. If you're actually serious about this, grab a pencil, grab a pen, grab some paper, take some notes on this, okay? Because look, there's a lot here to be unpacked. You're not going to remember it all in your head, and I'm just going to be honest, if you can't sit here for the 20 minutes or whatever, I don't know how long it's going to be, but if you can't sit here, take these notes and actually like try at this, then I don't know how you think that you're going to be able to put in the effort to get out of the break-even stage in trading, because it is one of the hardest things in trading to get through, in my opinion. So yeah, I mean, definitely, definitely focus as hard as you can on taking notes on this video, okay? I think it's recording. Yeah, it's recording. Okay. So, also want to say, uh, liamkits.com in the bottom. If you fill out the form, I'll send you this doc, okay? Because I know some of you might want to actually just have this as reference too, instead of just watching the video over again. Whatever suits you guys. But yeah, so how to escape the break-even stage in trading. So, you know, a lot of you guys need to just start off by like assessing your current state, right? So, like, really take a good look at yourself and your trading and your track record over the last, like, let's say month. And the first thing I want you to figure out is what's causing you to be stuck at break even, okay? So, is it over trading? Is it emotional trading? Is it over risking? Do you have a bad strategy? Do you not have enough practice or data on your strategy? Right? So these are all things that definitely are one of the these are the biggest causes of being a break-even trader. Everybody has their vices in trading, and these things are the biggest vices for people. Over trading, super big vice. Emotional trading, letting your emotions get the best of you and convincing yourself that there's a good setup to take, stuff like that. Over risking, that is going to make you a break even trader, because if you're risking more on a setup you think is good and it loses, and then you risk less on a setup that actually is good, but you're scared because you risked more and lost more, you're going to be a break even trader. It's not consistent risk, right? If your strategy is bad, then I mean, that's literally the biggest handicap you could have. The first thing you want in trading is a proven strategy that works. That is what's going to get you to the stage where you can actually focus on your psychology without having to worry about if your strategy is good or not. So, if you don't have enough practice or data on your strategy, like if you haven't back tested hundreds of trades on your model, then of course you're going to be stuck at break even. You don't know anything about your model. Okay. So the second thing is you probably already know exactly what it is. For me, when I was in the break even stage, I knew my vices. I knew exactly what I needed to do to get out of it. I knew exactly the things that I was doing wrong that I needed to stop doing. Okay. So, yeah, like I said here, guaranteed you know what is holding you back and keeping you in the break even stage. It's the stuff you're struggling to give up. So, in trading or outside of trading, it doesn't matter. I'm serious. Like, if you're being lazy as fuck outside of trading, it's going to impact you in trading. You can't skip the gym, be inconsistent outside of trading, and then expect to be like some crazy trader who follows all his rules and makes like 30K a month. That's not happening, bro. Inside and outside of trading, there are things that you need to give up to make yourself the best version of yourself in order to get out of this break-even stage. And it's the bad trading habits, constantly breaking your rules that you constantly repeat, yet you still don't fix for whatever reason. I know you're thinking of it right now. There's definitely one thing that you constantly repeat and you still don't fix it. Why, bro? Like, you know what you need to do. Why don't you do it? Seriously. Like, why are you deviating from your model? Why do you break your rules? Why do you convince yourself a setup's good when it's not? Why do you signal bot? Like, these are things that you cannot do if you want to be a self-sufficient, profitable trader, not a break-even reliant trader. Third, you probably already know exactly what you need to do. So, breaking off of this, you already know exactly what it is. You also know exactly what you need to do, which would be cutting it out, right? So, I know I did. When I was in the break-even stage, I knew exactly what I had to do. I had to back test more, definitely. I didn't know my strategy enough and I didn't do enough work. And I always had the lingering thought in the back of my head that I wasn't doing enough back testing and I should be doing more, because I know people that are better than me at trading and more experienced are definitely doing more than I was, but I never ended up actually doing more back testing. And that's what held me back for a long time. I also had to divert my focus in trading from making money and a money focused mindset to instead thinking and focusing on my trading, on following my plan and being a consistent trader, consistent to my rules, consistent to my model. The thing, like, one of the biggest things is you can't focus on money in trading. You have to go into trading with the mindset of being the most consistent, disciplined, and best version of yourself. That's truly what, like, most down to earth, you need to be the best version of yourself, and that's what you need to focus on in trading. After that, another thing that can hold you down in this break-even stage in trading is your edge, your strategy. So if it is that, you need to refine it if needed, okay? Some of you have a perfect proven strategy, and the only thing you need to do is backtest more, or you already backtest more, and that's perfect. Then this doesn't really apply to you. I'd still write it down and definitely keep it in the back of your head, but it's not necessarily as important as these other ones, okay? So, does your strategy suck, and how do you know? Right? So do you have back testing data to prove that your strategy is profitable? Regardless of if you made it or if someone else made it, it doesn't matter. You need to know if it's a profitable strategy. If someone else, okay, you can have a mentor that says this strategy is profitable, but if you don't know it yourself, why would you even trust that strategy? Like, I know for a fact, I did not trust the strategy I was learning when I did not backtest it and get the data that proved it was a winning model myself. I started to trust myself and my model more once I actually got the data to know that it's profitable. Okay. So did you learn the strategy from someone trustworthy? That's the biggest thing. You want someone that's trustworthy, that has proven results in the markets and in the space. You need to learn a strategy from someone like that. Okay. I don't care who it is, but I'm just saying that is a very big thing in trading. So next, do you even know your stats on your model, right? So if you don't have at least 100 to 300 trades worth of data back tested on your model, chances are you're barely close to even getting out of the break-even stage. You need, literally, you need to back test much more than you think. That's the biggest thing for me. I had to back test way more than I thought. Ingrain your model into your mind. And your strategy should be second nature. No hesitation, no second guessing. You should feel fluid, both in the live markets and backtesting, okay? Your strategy is a part of you, and it feels easy to take trades that compel you. You should feel compelled to take trades that, you have proven data on. You're when you're looking at a chart and you see your model start to present itself, if you feel really pulled towards this trade and compelled, it's a good strategy. And that's the kind of feeling you need to build in trading if you want to get out of the break-even stage. You need to build that feeling of trust in your model and just overall understanding of your model. Third is your strategy and your trading rules strict enough. So there's a lot of people that don't have that strict of rules or a strategy, and they'll bend their rules too. They don't have like strict rules to follow, right? So one, like, this biggest thing is, are you allowed to just trade whenever? Are you allowed to enter on whatever? What risk to reward ratio is most optimal for your model? These are questions you need to be asking yourself, because you need to know, like, am I allowed to trade at like 8 p.m.? That doesn't make sense. Trade New York AM session, maybe PM session if you like it, if you're good at it, if you're more of an experienced trader, if you back tested it, okay? But you shouldn't just be trading whenever, honestly. You should have strict times, the kill zones, the best high chance, the highest probability times. Those are the times when you should be trading, and you should have that data with your model. Okay? Can you enter on whatever? You need a strict entry model. You can't just be clicking buttons whenever because you feel like, price is going to go there. There are some models that are like that, but I think that's more of a discretionary thing. And as a break-even trader, you want to reduce the chances that your emotions tie into your trading as much as possible. And what that means is discretionary trading is much more likely to have emotions tied into it and bad decisions because of emotions tied into it. And if you're trading a mechanical model with a strict entry model, that reduces a lot of the chance that you're going to be entering off of straight emotions and discretion. Okay? And what risk to reward ratio is most optimal for your model? So, like, a lot of people aren't catching like 10 RR trades out of the blue. It doesn't happen. The highest probability strategies for the most part are going to be around 1-to-1 to 1-to-2 RR. Honestly, it depends on your model, but that's why I'm saying you need to know what risk to reward ratio is actually highest probability and most optimal for your model. If you don't know that, you're going to set emotional take profits in like 30 RR, and it's never going to hit. And that's why you're a break-even trader, because it goes, to where the highest likelihood of the price reversing is, where your TP should be, and you have an emotional TP way farther than that, and it goes and breaks even, or stops you out. That's why you're a break-even trader. You can't be setting those type of emotional TPs. Okay? Now, is there an actual criteria for how you're going to enter? Otherwise you're obviously break even, because you can't be taking just anything and everything. You need certain things that you have to see, it's criteria in the markets in order to enter your trade. So, right, for me, I need to see a high time frame unfilled PD array, like 99% of the time, a fair value gap, an unfilled fair value gap. I need to see that be tapped before I can even start looking for confluences to enter my trade. Okay? Stuff like that is very important. You need a strict criteria. It needs to be mechanical. That's the easiest way to get out of the break-even stage, is trading mechanically. Okay? And just like I was saying earlier, where do you take profits? Where do you place your stop loss? Are these decided by emotions or set rules in your model? Okay? So a lot of people are just take profits and stop loss wherever it looks good, or, where they feel comfortable. You need to have data proving where the highest probability stop loss and take profits are going to be. For me, if I have an SMT, I know 99% of the time I need to put my stop on the wick, because price needs more room to move around when we have an SMT going against my trade, right? Or going with my trade, whatever, you know what I mean? But you need to, stop loss placement especially is very important in trading. I remember when I was in my break-even stage, a lot of my losses were just premature losses because of bad stop loss placement, and price would run to my TP, or I would start trailing my stop loss for no reason, and then I'd get my trailing stop hit, and then price would run to TP. You need to have strict rules on what's going to happen, right? So do you move your stop? Do you trail it when you're in profit? Where is your stop most likely to allow price to work and work towards your trade, winning or losing, even if you're in drawdown, without getting hit? Where is the highest probability point? And for take profits, where is the highest probability point that you can look to take your profits at, as well as where is it going to reverse? Where is the most likely point it's going to reverse? That's where you want your final TP. You need to know these things, all right? Sorry, I'm just going to check. This is a long video, so if my camera doesn't work, I'm going to be pissed, bro. But it looks like it. Next, I hope you guys are taking notes, like I said. Thanks for watching to this point. This is some of the really most important stuff, I'm not going to lie. So, simplify and refine risk management and trading plan. Okay. So, for this, as a break-even trader, a lot of the time you're overcomplicating your risk management and trading plan. You need to simplify and refine it to where it's so straightforward that you're not questioning yourself ever, you know? So, over risking and over trading. Make yourself a trade limit that is so strict that it's impossible for you to break that rule. Over trading or over risking is going to turn your green days to break even or red and turn break even days to red. Be consistent, okay? So what this means is, like, if you're a break-even trader because you're struggling with over risking and over trading, you need to set limits on yourself. Set risk limits, stay consistent with your risk, and set trade limits, okay? When I was a break-even trader, I set a 1 trade a day rule. Now I'm okay with 1 to 2 trades. Usually stick with 1 trade though. That's just how my rules have been, and it's been working. But you need to have that be strict. This is going to simplify your risk management and trading plan as easily as possible to make it so straightforward for you to be a profitable trader. So if you need to, limit yourself to 1 trade a day, do that, because that will keep you as consistent as possible. Next, the quality of your setups, all right? A+ setups only. This is a no-brainer. No more random spontaneous trades that you have a gut feeling about. Be mechanical with your trading, okay? Take A+ setups only. This is what I did. I would only take A+ setups. And yes, it meant that I would go days without taking trades, but looking back, I was profitable. So that doesn't matter, right? If you're taking A+ trades only, your win rate's higher, your profits are higher. If you care about profits that much, which you shouldn't, you should only care about your statistics, okay? But anyways, everything's going to be better if you're taking just A+ setups. Consistent risk. This is obvious, but a lot of people don't know how to risk properly, all right? Why are you entering a random amount of contracts each trade? I see people entering 1 mini on every trade and just putting their stop wherever, and it's your risk is all over the place. You could have a 200 risk and you could have 1,000 risk, and the 200 risk could be on an A+ trade, and the 1,000 risk is on a dog shit ass trade. Why are you doing that? Have consistent risk. Holy shit. Okay. Calculate the amount of contracts you need to enter in order to be at or a little below your consistent risk, okay? So for me, on a 50K account, I risk $300 every single trade. No matter how big the stop is, I just change the amount of contracts I have. I calculate it to make sure that my risk is 300 if I'm getting fully stopped out, okay? This allows me to stay consistent with wins and losses, and it's easy to calculate the number of contracts needed, okay? I have a little cheat sheet photo thing that makes the trading view, take profit, stop loss, the thing that everyone puts on their trades when they're in a trade that shows the risk to reward. There's a way to calculate the amount of contracts for the risk you're using. I have a screenshot thingy of that makes it really easy to understand. So if you want that, just comment below and I can give that to you too. Comment or text me on Instagram, something like that. But yeah, consistent risk is really important, because if you're all over the place with your risk, of course you're a break-even trader, because you're going to be losing more on bad setups and making less on good setups, stuff like that. Are you actually following your plan? Be honest with yourself, okay? If your strategy and trading rules are strict enough and you're following them to a T, you shouldn't be a break-even trader. So if I know for a fact you're thinking in your head about the 1 or 2 things that you could be doing better and aren't following your trading plan, but you still do them anyways. And that's what you need to get rid of, and that's what you need to be honest with yourself about. Okay. A lot of getting out of the break even stage just requires you to be brutally honest with yourself. Hold yourself accountable to your trading plan and rules and aim to go for 10 trades without breaking a single rule. Then 20 trades, 30 trades, so on and so forth, right? Like you need to be consistent and you need to always be taking the best quality trades and actually be following your plan. So worried about my camera going off. Okay, master your psychology and discipline. This is really important. Psychology is everything in trading. It's 90%, 80%. It's like massive in trading, okay? What I need you to do first is detach from money. Like I said earlier, you can't trade for money. You can't trade with the idea of money, success, or whatever it is that's in your head that you're trading for right now. You can't. You can only trade with the thoughts and ideas of being as consistent as possible in your mind. Sorry. You can only trade thinking, how can I manage my risk properly, execute on my model to a T, and never break my rules? That's how I trade, and it helps so much. I'm always thinking and questioning myself, okay? You can't go and be, oh, this trade's going to make me so much money. I have to enter. It's going to be a losing trade, bro. Come on. Enter if it's a good trade, and always prioritize being a consistent trader. Am I entering this trade as a consistent trader, or am I entering this trade as an emotional trader? Is this a loss I'd be happy with? You know, these are things you need to ask yourself. You can't just think about money and trading. Stop romanticizing being profitable. All right. Like so many people just like they freaking like they lust over and like desire over profitability. Like why do you highlight it so much? Being profitable, it's amazing, yes, but if that's what you're constantly thinking about, you're never going to become profitable, you know? Like if you're entering trades thinking about becoming profitable, you're gonna lose trades, bro. You can't be entering a trade and just be thinking, bro, this is gonna be the trade that makes me profitable. You can't do that. Why are you doing that? Come on. Hesitation. This is something I really struggled with for a while. Okay, so hesitation. How can you fix hesitation? So there's a 3-step process that my mentor taught me that really helps, and it's assumption, confirmation, and execution. What this means is when you're watching the markets, going through the markets during the day, you need to have an assumption of what you'd like to see, okay? So for me, let's say, I don't know, I want to see us I want to see us trade up into a 4 hour that's above us, then get a highest time frame inversion down targeting an unfilled 5. That's what I want to see. If that doesn't happen, I cannot take a trade, okay? If it does happen, step 2, confirmation. It's confirmed it did happen, okay? Now the only thing left to do is number 3, execute. You have to execute, okay? But you also should ask yourself, do I feel compelled to take this trade? There's a lot of times where you're going to convince yourself that this is a great trade. And yes, it may be, but if you don't feel compelled, if you don't have that gut feeling that you want to take that trade, you shouldn't take it. You should feel compelled. It should be obvious that this is a good trade to take, okay? Are you scared to lose? If you're scared to lose, you shouldn't be trading, okay? You need to accept the fact that risk is always on the table. Everything is random. There's only probability. You only have a higher chance on certain setups of winning than losing, okay? Can't be scared of losing. It's a part of the game. Are you confident in your model? If not, back test more. Geez. This was 75% of the reason I got out of hesitating on setups is by backtesting more. I didn't have enough data, so of course I wasn't profitable. I wasn't consistent. It's because I didn't have enough data backtested on my model. You need more data. You need to be confident in your model, of course. One sec, bro. My throat is so dry. All right. Last one. Your mindset is probably shit. Let's be honest, okay? Your mindset is probably shit. Like, you go into trading expecting to lose or like calling yourself an unprofitable trader, right? So you need to treat trading like a business. Trading is a job in a way, okay? Like, yeah, I know we all hate jobs. We don't want to work for someone, but listen, like, Trading is a job in the way that you have to perform at your best ability. Otherwise, you're fired. And being fired in trading is losing your trade, losing your money, losing your account. Okay, so trading is a business. You have to be serious about performing to the absolute best of your ability. I heard this the other day. Apparently, pit traders, like people in hedge funds and that stuff, that are employed traders, right? They are required to get up off their desk and not trade for the rest of the day if they do take a loss on the day, okay? That's how I need you to treat trading yourself at home. Yes, you don't have your job on the line where they get fired if they start emotionally trading or entering more trades after a loss, but treat it as if such, okay? You need to get up after your loss, one trade a day. If you lose, get up. Your job trading is on the line, okay? Do you actually believe in yourself? All right. A big part in the fact that I was break even is that I identified as a break even trader. You can't do this. Okay. You need to change your identity, change your habits, and change your life. Tell yourself and repeat to yourself, I am a profitable trader. I am disciplined. You are disciplined. I am consistent. You are consistent. Okay. I am statements. Put yourself into the flow that pulls from an abundant source of creativity, discipline, and consistency. All right. So what you need to do for this is the final thing. Are you practicing gratitude? In order to pull from an abundant source of creativity, discipline, and consistency, you need to be practicing gratitude, regardless of your current situation. If you're unprofitable, I don't care. Be thankful that you're unprofitable. All right. Have gratitude for your situation, good or bad. It will put you into a state where you can pull from an abundant source. An abundant source of what, you may ask? An abundant source of consistency, of discipline in your trades, of clarity. You want to be clear and clear-minded in the markets, okay? If you truly want to be a great trader, you need to be abundant in all things. Thank God for the fact that you're a break-even trader. But now you know how to get out of it. Thank him for that. Thank him for the fact that you now know how to get out of being a break-even trader because of this video, okay? Identify and tell God that you are a profitable trader and you know how to succeed, okay? Everything you need is in this present moment. Be grateful for the present moment because it's all you have, right? There's anything in the past doesn't matter and you can't tell the future. Everything is in the present moment. So if you're not performing to the best of your abilities in the present moment, you're doing yourself and God a disservice, okay? In the live actions of the markets, be grateful for the opportunity God has given you. If you're truly grateful and you tell him so, you will feel compelled to actually act as if you are a profitable trader. You're not going to want to break your promise to him, right? If you're acting as if you're a profitable trader, why would you turn on your word and start breaking your rules when you, in the present moment, just told God how grateful you are for having the ability to actually follow your rules and be disciplined in the markets, right? So if you're telling him you're thankful for actually being able to be a consistent trader, why would you go and now start breaking your rules? That's like a betrayal. You can't do that, okay? But anyways, I do believe that is everything. And I thank you guys for watching. I really hope this did help. This was like a almost 30-minute video. But yeah, let me know if this is what you want to see more of. Thank you guys. God bless.